In today's video, I'll be going over why I think that Hood could 10x in 5 years. So, imagine turning $10,000 into $100,000 in just 5 years. That's exactly what a 10x on Robinhood would do. Right now, the stock sits at around $82 with a market cap of $78 billion. But after their record 2025 results, I'm convinced that this is one of the highest upside names in fintech. Robinhood just dropped their quarter four and full year earnings for 2025, and let's talk about the numbers. They saw revenue of $4.5 billion, up 52% year over year, net income of $1.9 billion, which shows great margins, over 27 million funded customers, 324 billion assets under management, and 4.2 million gold subscribers, which is up 58% year over year. The stock dipped post earnings because crypto revenue fell 38%, but this is only classic short-term noise. Here are the 4 reasons I believe Robinhood can 10x in 5 years. Let's dive in. So, reason 1 is because the growth is still in early innings. They only have 27 million funded customers, which sounds big on paper until you realize that this market is enormous. In the US, there are about 260 million adults, and only 10 to 12% actively use Robinhood today. They have gold, and their gold subscribers, which is only 4.2 million, could go up to about 15 to 20 million. They're expanding internationally, especially in the UK and the EU, and launching banking, retirement accounts, and even prediction markets. The bull case is that 80 to 100 million funded customers could be possible globally by 2030 to 31. That's 3 to 4 times the users that they have now, plus higher average return for more products. Now, let's talk about the second reason. This is because revenue is diversifying and crypto is a free call option. 2025 revenue breakdown was already healthier than people think. Options and equity exploding 41 plus 41% and plus 54% in quarter 4. Subscriptions in gold are surging, net interest income was stable, and crypto was the only drag in quarter 4, but they also launched a new product, which was prediction markets, which surged. Although crypto trading revenue is down right now, the bull run hasn't even started. Bitcoin isn't even at 100K yet, and if it does reach that and a full altcoin season, it could easily 5 to 10x that line item again. Conservative 30% compounded annual growth on total revenue from 4.5 billion puts it at 17 billion by 2030. And aggressive but very plausible would be 40% compounded annual growth, which is 25 to 30 billion. And that's a lot of money. Now let's talk about the macro tailwinds plus product flywheel. We are in a secular bull market for retail investing. Gen Z and millennials are the wealthiest generation in history and love mobile-first finance. Crypto adoption is absolutely accelerating, and potential lighter regulation in 2026 and 2028 with Trump could be huge. They have new products rolling out, including Robinhood Banking, credit cards, margin, futures, retirement matching, and Robinhood Chain, which I think could be huge. Robinhood is becoming a true financial super app, and once users are in, they're never going to want to leave. And now let's talk about the final reason. This is because the valuation math works in a bull scenario. They have a current market cap of 78 billion, but if you 10x this, that's 780 billion by 2031. Stock is around 800 to 850, assuming modest share count growth. Now let's talk about the plausible path. If their 2030 revenue is 25 billion and their net income is 10 to 12 billion, and their multiple is 40 to 60 with gross stock multiple, but still below today's if growth is strong, that puts it at a 400 to 700 billion market cap base case. In the true bull case, crypto super cycle plus 100 million users with their banking taking over, 40 billion revenue plus 15 billion net income plus 60 multiple gives it a $900 billion market cap, which would make it one of the biggest financial companies in the world. For context, Charles Schwab is $170 billion today, but Robinhood is already nipping at their heels in a growth rate. Becoming the Schwab plus Coinbase plus SoFi the next decade isn't crazy. And now let's talk about some of the risks. Of course, there are risks with regulatory crackdowns and prolonged bear market. Plus, if they have some execution missteps or new competition, this could slightly, decrease the valuation of Robinhood. But the upside asymmetry is insane. Downside is probably 30 to 50% in a bad scenario, but the upside is 5 to 10x if they execute. Robinhood isn't just a trading app anymore, it's building the default financial operating system for the next generation. I am very long on Hood and adding on dips. Now, let's take a look at what happened on earnings today. So, as you can see right here, after earnings today, they absolutely tanked. Now, why was this? This was only because of crypto revenue going down. Honestly, in my opinion, it wasn't from anything else. Now, I am going to add on this dip, but I'm not going to buy Hood. Instead, I'm going to buy one of their 2x ETFs called Robin. This gives me 2x the upside, but it also guarantees 2x the downside. So while this is a risky bet, I'm super bullish on Hood and will continue to hold this 2x ETF. Now let's take a look at some of Hood's technicals. As you can see here, Hood has currently fallen down hugely from their highs. As you can see here, Hood is down almost 40, it's down almost 50% from their all-time highs. So this means that if they do rebound, this could be 100% gain, which is absolutely insane. And while this is true, I think that Hood could blow way past its all-time highs. If it grows at the rate that it should, it will just never stop. So yeah, guys, I think that Hood is the next 10x opportunity, but let me know what you guys think. Is Hood a good stock, or is it going to get crushed? Let me know in the comments down below. Thanks.